Hello, and welcome to the sixth episode of the True Dollar web series. As you hopefully know by now, Texas Trust is presenting a monthly webinar on Facebook Live every second Tuesday of the month to help our community and members manage their finances during the COVID crisis. My name is Washima Huck, and I am a business and community engagement partner for Texas Trust, and I will be your moderator again today. Like always, you are welcome to engage with us by leaving comments or questions during the live session. We will be sure to answer as many questions as we can in the allotted time or get back to you individually after the webinar is over. As we know, life happens. You may have had hardships that resulted in taking on debt or not being able to save more. Creating a budget may help you stay on top of your finances and reduce your debt obligation so you can position yourself to be financially stable. It can also help you pay a little down payment or a healthy down payment for a new car and take on an auto loan with a good interest rate. In the first part of the hour, we will define some of these concepts and teach you how to create a spending plan. And then we will talk about a few things you may want to keep in mind while you buy your next car. But first, we at Texas Trust would like to highlight some resources accessible to our communities. So every month we have been featuring a nonprofit organization located in one of our Texas Trust towns. June's spotlight nonprofit organization is Henderson County's Help Center. But first, I would like to do something different today. I actually would like to introduce our branch manager in Athens, who is our face in Athens, Christy Hammonds, to introduce herself, and then she will welcome Leslie Saunders, who is the executive director of the Help Center. Christy,
Hi,
you.
Hi everyone, I'm Christy Hammond, branch manager here at the Athens office. Been with the credit union now or manager of the credit union now for about 7 years. Been with the credit union for over 24. If you have any questions or anything you need any assistance with, I would love to help you with that. Right now though, I'd like to welcome the executive director of the Help Center, Leslie Saunders, who will highlight the resources they provide to our community. Leslie?
Thank you, Christy, for that great introduction. As Christy said, I'm Leslie Saunders, and I'm the Executive Director here at the Henderson County Help Center. The Help Center provides an array of social services to Henderson County, from one end of the county to the other. Some of the services that we provide to the county, we have a child advocacy center here on site. So we have a program called Maggie's House, which provides services to children of abuse and neglect, and we work very closely and partner with the law enforcement in our community, child protective services, prosecution, mental health, and medical to provide those children all the needs they need during their time of crisis or alleged abuse and neglect situations. We also provide services to the non-offending caregiver. We also have a teen abstinence program across the county that we provide that service to school districts grades 6 through 12. And we also have a teen parenting program in those same school districts. We also have a program called Supporting Crime Victims Through Crisis and Beyond, which is a program that supports crime victims from that initial outcry or that initial crime all the way through the prosecution phase. But one of our programs that we are so proud to have is the United Way Helpline. The United Way Helpline is able to help families across the county with emergency financial assistance that can assist them short term if they find themselves in need of support with a utility bill, with medications for their family members or themselves, some small rental assistance, but we can also reference and refer them as needed. So if you're finding yourself in that situation during COVID, we can reference and refer you to an organization or a program that can assist you, or we can provide emergency financial assistance here. You would need to come into the center, fill out an application, and we'll process that application within 24 to 48 hours, and then we'll let you know how we can assist. No financial assistance goes straight to that individual. It goes straight to the organization that you're asking for support services for, whether it's an electric bill, a water bill. We provide that voucher system to those organizations. But in this time of need through COVID, we have seen an increase. And so if you are in that need of needing support services for an emergency financial assistance situation, we'll be glad here to support you and to find those needs for you here at the Henderson County Help Center, where we will be open full-time July 1st. And so after July 1st, please come in and see us. Before July 1st, we are taking applications via online or by the phone. So if you are in need of these support services through the United Way helpline, we're here for you. Just give us a call at 903-675-4357, and we will be able to help you either reference and referral or provide that emergency financial assistance through the United Way helpline.
Fantastic. Thank you so much for sharing that message and speaking on behalf of the Help Center. We did post the contact information on our comment, so if anyone wants to save that, click on it, or screenshot it, you're welcome to do that. And thank you for the resources and assistance you're providing to our community, especially right now with what we're going through globally. Just so our viewers are aware, Leslie will stay on until the very end. So if anyone has any questions for her or the Help Center, you're welcome to ask us throughout the presentation, and she can answer them towards the end. So we're going to get started. But before we do that, just a little bit about Texas Trust. We like to let anyone who's watching this for the first time know a little bit more about us as an organization. So our mission is to build brighter financial futures, and we have been helping people live brighter since 1936. We are a not-for-profit organization. That means we invest profit back into the credit union to help our members and communities by offering higher savings rates, lower loan rates, and through community engagement. We are a full-service financial institution with about 20 locations throughout Texas. For more information, please do visit texastrustcu.org. And now I would like to introduce our presenter today, Ms. Crystal Hamilton. Crystal Hamilton is our VP of Branch Operations. She has been in the banking industry for over 20 years. She started as a part-time teller while going to college. Her career has included working in large banks such as Chase and Bank of America, and finally finding her home with Texas Trust Credit Union. She has been with Texas Trust for going on 10 years, and in that time she has held multiple positions, working her way from assistant branch manager to vice president of branch operations. She completed her bachelor's degree at Western Governors University in the field of business management. In her current role, Crystal spends her time supporting her leaders through direct coaching, development and training, inside and outside of the branches. Even as a VP, you can catch her in one of her branches working on the teller line and processing transactions. Thank you so much, Crystal, for taking care of our members, and we're very excited for you to present the webinar today. I will turn it over to you now.
Awesome. Thank you, Washima. I am so excited to be here. Not gonna lie, a little nervous, but I am super happy to be able to present today. I want to kind of talk to you guys about the goal of the seminar. So the purpose of this one is to supply you guys with some best practices for managing your debt, helping to create a good budget, and financing an auto loan. Now, I will say, Washima, with all of this rain and this crazy weather, we may need to change this financial session to talking about financing a boat, but we can maybe do that on the next go round. All right, guys. So let's get started and review the more specific objectives that we'd like to discuss today. So the first one is we want to talk about giving insights on analyzing your debt. Another thing that we want to do is share some tips with you to help you make changes to your current spending habits. We also will go over steps to create a good budget. The next thing is we want to talk about what to look for when you are buying a car. Let's talk about a little bit with payments and interest when it comes to purchasing that vehicle. And last but not least, we definitely want to discuss our wonderful GAP, credit life, and disability insurance products that we offer here at Texas Trust. All right, so let's move on. The first big question of the day, how are you managing your debt? First thing, let's talk about analyzing your current debt. Are you creating debt just to pay off debt? Or do you even have a plan? If not, let's create a plan. So let's talk about a few things that you can do with this plan to help you with that. One of the things, paying off those high interest debts first. As you continue to pay those high interest debts, you'll notice that your payments become smaller and you get that loan paid off quicker. The next thing, roll up and increase those monthly payments. Now, I know a couple of you have a couple habits. Mine is Amazon. I know a couple people that's Starbucks. So maybe you can take those Starbucks drinks, make you something at home, and use that money to roll up and increase those monthly payments that you're paying each month. The next thing you want to do is make fixed payments. Fixed payments is going to help because it's going to increase where you're not paying percentage payments. The next thing is talk about borrowing at low interest rates or refinance. And that is where Texas Trust truly specializes in helping. We have wonderful rates on our unsecured loans, our auto loans, and even credit cards. So if you're looking for debt consolidation, come see us. The next thing that you want to do is consider a debt consolidation loan. So not only does that lower those payments, but it also now makes it convenient because it rolls it up into one easy, simple payment, quicker to pay everything off, lower those interest rates. It's a win-win. All right, so let's move into some best practices for managing your debt. I want to give you a couple of tips here. So let's start with the big one, credit score, credit score, credit score. You want to maintain a credit score of at least 720 and above because not only is that a good rate, but it actually shows that you have good credit management skills. The next thing you want to know is the total amount of time that it's going to take you to repay that current loan with your monthly payments. So you want to know the total amount that you'll be paying over the life of the actual credit obligation because how much you borrow versus how much you pay overall may not always be the same. You want to definitely consider associated costs that could include fees or interest. The next thing you want to do is ideally get that DTI ratio to under 20%. And just so you know, DTI currently stands for debt to income. So it's basically how much you actually owe in debts compared to how much you're receiving and how much income you're bringing in. So when it comes to that gross and what you're bringing in with your income, you want to try to dedicate under 43% of that to those fixed costs. Fixed costs could include your mortgage or even potentially your auto loan. The next thing that's available is out there is applying for government assistance if you're encountering hardships. Don't drown in debt when there are resources available to you. The next thing that you might think about doing is setting an appointment with a financial counselor to help you reach those financial goals. Having a different perspective and someone that can help you take a look at your finances is also a win-win. And the last thing that I'm ending with on that one is save, save, save. So if your debt is paid off, which is awesome, you want to continue and you want to save that allocated money that you now have and you want to utilize that for your savings. All right, so let's talk about how we can make some changes. So as you analyze your debt and start thinking of some ways that you can change, let's think about a few things that we could actually do. So one of the things, start by saving and investing your money. So that money that we have in that mattress, or maybe we have in that savings account that's earning that teeny weeny little bit of interest on it, start using it, invest, make your money, make money for you. The next thing, don't rely on overtime. No, that's a little difficult because sometimes it gets real good and helpful, but you definitely want to rely on what you know you're going to be having to come in when you're setting that budget. The next thing is ask your credit union to run numbers to determine whether refinancing that mortgage or that auto loan makes sense for you. Again, something Texas Trust we specialize in. We have financial advisors that would love to help you to find ways to save you money. Other things that you can do is finance those loans for shorter amounts of time. Usually a shorter term on a loan tends to mean better interest rates. The next thing is consider share housing or renting. You could potentially purchase a smaller or simpler home. Sometimes simple can be great. One of the things that you also could consider is avoid paying for a storage unit by selling those things you don't need. I'm guilty of that one. So yes. Lastly, consider using those energy efficient products and applications. You'd be surprised how much they would save on your monthly bills that you have. The next thing, bundling that insurance with one company. So everybody knows we see Flo all the time talking about saving money when you bundle. It's a great idea because it's a great way to bundle, save money, save money, save money. The other thing when it comes to your insurance, when you're shopping for those quotes, try out at least 3 different companies to identify the best package that works for you. The only thing that you don't want to do is have them run your credit excessively. Now, make sure when you're comparing those policies, you're comparing apples to apples so that you're making sure that you are getting the best rate for the package that works for you. The next thing is use your credit wisely. Do your research when you're looking for that loan or that best credit card for you. Some things that you want to consider is the annual fee, the interest rate, maybe what the grace periods are, the cost of those late fees, over the limit fees, and potential penalties. Now, what you do not want to do, and I repeat, do not apply for every credit card that you come across while searching for the best one. And the next thing is you want to pay off those credit cards that have the highest interest rate first, while making at least the minimum payments on all of your other cards. So, another thing that you could do is consider consolidating your debts, which we kind of talked about before. When consolidating, only include debts that have interest rates that are higher than the consolidation loan's interest rate. Doesn't make sense to do a 0% credit card, refinance it for 8%. That's not saving, that's spending. And the next thing is consider balance transfers. So if you're anything like me, you get those balance transfers in the mail all the time. And some of them are actually very useful in ways to help you to save money on those balances that you're currently carrying on your cards. The other thing, only charge when you can pay the full amount off by your next billing cycle if you're looking to avoid paying additional interest. You want to eliminate late payments by doing this one thing, paying it on time. And the next thing is you want to understand the terms and conditions of each of those cards. So that means, guys, you got to read the fine print. And the next thing is beware of payday loans, as they tend to charge very high interest rates. All right, so let's move on and let's talk about the benefits of having a budget. The first thing that you need to know is the budget is a roadmap, and it's going to help you to figure out whether you're going in the right direction to meet your financial goals. It helps you to make more informed choices about where your money is going, and it leads to a more enriched lifestyle. So it also tells you whether you're living within your means, and that's a huge one. That's whether your income exceeds expenses, and it also helps you identify those spending leaks, and I'll tell you my spending leak is Amazon. You'll probably hear me say Amazon through this whole presentation, Amazon. But it also helps you to meet those savings goals, like financing a car, or helping you to be prepared for those unexpected emergencies that do come. The next thing is just know without the roadmap for managing your money, you can lose control, have more stress, and are less likely to achieve those financial goals that you're looking at meeting. And so just knowing with your roadmap, it helps you to be more in control of your financial future. All right, so let's talk about how to be smart with our goals. So let's make your financial goals SMART. And for those that don't know, it's on here, but let's talk about what SMART stands for. You want to make sure that your SMART goal is specific, measurable, attainable, realistic, and timely. So what you want to do is you want to start by setting a time frame for this budget. So let's talk about short term. Maybe your short term budget, you got a trip that you're going on in 6 months. Perfect for a short term budget. There you go. Maybe you want to do an intermediate budget, saving for the next 1 to 5 years. Maybe you're looking to save for that house. And the next one is going to be your long term. So more than 5 years away. Maybe you're saving for retirement. But it's great to identify the time frame of what you want your goal to be at. All right, so as promised, let's talk about how to get that 5-step budget put in place. And the first thing that you are going to want to do with your first budget is to create the steps. And the first one is we're going to go ahead and list all of your income sources. Let's talk about a couple. 1, your wages, your salaries, bonuses, and potential tips. Interest and dividends. Gifts, we all like gifts. That good old tax refund or stimulus check. Capital gains. Your pension, annuities, and maybe distribution from your IRA. Child support or alimony. Social Security, rental income, or even business income. So the next steps that you want to do now that you have calculated all of your income that you are receiving is now we're going to talk about how you spend your money. So it's time to now talk about the expenses that you might have. So how are you currently spending your money now? Fixed expenses. So those again are going to include your mortgage, maybe your car loan. Flexible expenses. So those are going to include your food, your clothes, your utilities, and maybe gifts that you're giving. And then those periodic expenses, which could be your insurance or your taxes. All right, so now we are on step 3. The third step is now to balance your income and your expenses. And once you actually start tracking, you'll actually get a good sense of how your money is flowing. So matching income with expenses is a step that a lot of people do not make time for. But it is so important to do if you want to make the most out of your resources and achieve your financial goals. So we got some simple formulas here. If your income is more than your expenses, it's time to save more. On the flip side, if your expenses are more than your income, it's time to make some changes. So let's remember this as well. Savings is also in the expense category. What that means is as you get those expenses under control and as your income increases, put more money into savings. The next thing that you want to ensure that you're doing is tracking those expenses by whatever your process works. You could keep receipts in an envelope for as long as you think you need to, or you could use your statements or even use your mobile banking app to track those expenses that you actually have coming out. Step 4. So the fourth step is to review your system and communicate. So when you are tracking those expenses, you want to make sure that you are tracking them regularly, and you want to find places to save. And that's those spending leaks, as I told you. For me, Amazon. For others, Starbucks. So let's talk about what are some examples of changes you can make if your expenses exceed your income. Some of the things that I have: eat out less, get a part-time job, let's see, delay some purchases, maybe hold garage sales, or bringing your lunch from day to day. A couple different things that you could utilize. All right, and so the next piece is going to be communicating your budget. So one of the things that you can do is have your family participate in that budget, or have an accountability partner, someone that can actually help you and keep you on track with your budget that you have set. And the next thing that you want to do is analyze and revise your financial plan. You got to ask yourself, does this plan fit with your goals? All right, so we are at the 5th and final step in developing an effective budget. And you got to commit to managing your system for the long term if you want this to work. The key to any successful spending plan is to get in the habit of managing a system that works for you. So you want to make sure that you are tracking those expenses and paying bills regularly. You need to start with an end date in mind. Always keep your goals in mind as you develop your roadmap for spending. And the next thing that you want to do is make sure you review your goals at least annually or after any major life changes. So the next thing that we have on here is some budgeting tools that we recommend. One of them being Every Dollar. You can utilize the Mint. A simple Excel spreadsheet will work as well. And then Money Manager, which just so happens to be available with Texas Trust Credit Union's online banking. All right, so now that we've talked about our budgeting, let's make our transition into buying a car. My favorite part. Anybody that knows me, they know that one thing I like better than a new car is a newer car. So this is gonna be fun. So let's talk about what to do while you're shopping for a vehicle. We all know that it can be exciting, but it can also be complicated and time consuming when you're actually shopping for a car. There are many questions that you need to make sure that you have answered, like what features do you want or need on the car? Should you buy new or used, or should you lease? So since a car is an expensive purchase, one that usually cannot be returned just because you feel like you made a mistake, you got to think very carefully about what works best for you when you buy or lease so that you can ensure that you drive away happy. So you may have a dilemma of whether I buy a new or a used car. Let's talk about a few pieces with that. So a few reasons to get a new car could be reliability, manufacturer's warranty, and it has the ability to be customized. Let's talk about a few disadvantages. So some disadvantages are that a new car could be more expensive, or it could have immediate depreciation, and insurance and registration costs tend to be a little bit higher on a new car. So some of the advantages of purchasing a new car or a used car is they tend to be relatively less expensive and slower to depreciate. Here are some disadvantages though. With a used car, the repair and maintenance costs could be significantly higher. The car could be unreliable or lack safety features that you need. Or at some point, it no longer meets your needs. You may not know the history of that car, and that's very important. And usually the cars that are used come with limited warranty options. So next thing is a used car may need to be replaced sooner than a new car would tend to be. So let's move into some tips on what you could do to ensure that you're good when you're purchasing that vehicle. You definitely want to do some research before you buy. You want to ask for the repair history on that vehicle. You also want to run the VIN and get a vehicle history report. You want to take it to a used car or an independent mechanic for inspection before buying. And you want to look at your budget to see how much you can afford. All right, so we talked about leasing, and I personally will tell you, I lease, I love it, it's wonderful. It has its advantages as well as its disadvantages as well. So let's move into that. So The advantages of leasing could be that you drive a new car without having to worry about selling the old one. You also may be able to get lower monthly payments with the lease versus the loan. And you may have lower upfront costs. Some disadvantages could be the vehicle does not belong to you, so therefore it's not your asset. It could also be harder to get out of a leasing contract because there may be early termination fees or different things associated. You may have to actually pay additional fees if you exceed your mileage or if you leave the vehicle in poor condition. So one of the things that you can actually do is negotiate a lease. You could actually negotiate because the monthly payment on a current lease is the current value minus the value at the end of the lease plus any fees. So what you could do is negotiate the current value or purchase price of that vehicle. So you do this before telling the salesperson you're interested in leasing. Then you get that value lowered on the vehicle, and that means you have a lower monthly payment on that lease as well. All right, so we want to talk about qualifying for an auto loan and the things that you definitely want to know before you sign those documents. So managing debt, keeping your DTI low, and maintaining a good credit score can help you for the auto loan to get you a good interest rate. What you need is to have the minimum score required by the lender, as well as proof of current income and references in order to qualify for that auto loan. The next thing, you can actually choose to get pre-qualified for the auto loan before shopping for the car. That way you know exactly what you can afford. Texas Trust will be more than happy to do that. The other thing is if you don't qualify for that loan, you can wait, work on improving your credit, or you could get a co-signer. So some of your financing sources are the dealership. The dealership usually has promotional rates on certain vehicle models, but may not provide the lowest interest rates on others. You could come to your credit union or your bank. We offer flexibility and we can use any dealership when you're doing that loan, or finance companies. So some subprime loans from finance companies can come with extremely high interest rates, so just beware. So the things that you want to make sure that you know before you sign those documents, you want to make sure you understand the amount that you finance. You also want to know how long the whole loan is going to be. You want to know the APR. You want to know what the interest is that you're going to be paying on that loan. The next thing is you're going to want to know about the finance charges. You're also going to want to know the payment amount and number of payments that you will be paying over the life of this loan. And lastly, you want to know whether there are any penalties that come with this loan. All right, so we talked a little bit about the interest rate, prime and subprime. Let's kind of dig in a little bit more and talk about the interest rate. So the chart on the screen actually shows the difference between a prime and a subprime loan and how much an interest rate can impact your payment or overall loan balance that you pay. So lenders use a risk-based pricing system in order to set their terms, rates, and their fees. Prime loans are generally offered to those with a score of 670 or higher, and borrowers that have lower scores often qualify for subprime loans, where the interest rates and fees tend to be higher and sometimes adjustable versus fixed. Subprime lenders may require a larger down payment, they may approve a smaller loan amount, or they may allow for longer repayment periods. And as you see on this chart, the prime versus subprime, we're looking at the exact same loan amount, but those interest rates are hugely different. One is 5%, one is 15%. As you see, the person is paying the exact same amount of months on there, but the person with the 5% prime loan rate overall is paying a little over $18,000, where the subprime member on the other side is actually paying almost $23,000 for that exact same loan. So that just demonstrates where the interest rates, credit score, and all of those things are major impacts to when you're doing your financing. So you want to keep in mind that shopping around for rates and having different lenders or dealerships to pull your credit around the same time could lower your interest, or could lower your credit score, I'm sorry. So the next thing is, let's talk about your down payments. You want to ensure that you're budgeting so that you can save and put a healthy down payment on your car. 0% interest is an interesting conversation. Some dealerships offer 0% or no money down, but that is not always the best deal. When you do the 0% option, it could forfeit your rebates that you could get on that vehicle, and the length of the loan may be shorter, resulting in higher payments, and it usually is only available to people with stellar credit. All right, so now let's talk about our wonderful GAP, credit, life, and disability products that we offer. So the first one is our guaranteed asset protection, other known as a GAP. It's a great way to protect your finances and the value of your vehicle. So whenever the value of your vehicle is less than what you owe on your auto loan, this is where GAP is a great product. A good rule of thumb is to assume your new vehicle will depreciate more than 20% after the first year you own it, half of which occurs the minute you drive that vehicle off the lot. So this tends to leave a gap where you owe on your loan versus the value of your vehicle if it is deemed a total loss due to accident or theft. Our GAP program may reduce or even eliminate the gap between your vehicle insurance and it will take care of what you owe on the balance of that loan. Now, let's talk about credit life insurance. Credit life is sold by lenders, and it helps to pay off the balance of a particular debt if you pass away or become permanently disabled or develop a terminal illness. With our credit disability insurance, it can help cover the loan payments if you're unable to work for a period of time due to illness or disability. Texas Trust also offers additional mechanical and roadside assistant coverage, such as CU certified vehicle service contracts and CU certified road hazard tire and wheel to protect your vehicle. For more information about these products, you can visit texastrustcu.org or come in and speak with one of our bankers. Now, finally, Texas law also requires that drivers have adequate car insurance and carry proof of insurance while you are operating your vehicle. Insurance companies offer different types of coverage, such as comprehensive, liability, collision, uninsured, and underinsured motorists. Select the best insurance rate and plan based on your driving needs, driving history, and anyone else that may be covered under your plan. All right, so here are some online resources to help you make your purchase. Feel free to take a screenshot of this, and just identifying a few of these, you have your Edmunds Car vehicle reviews. We talked about vehicle history, so you got your Carfax.com, and of course you see Texas Trust on here as well. You're looking for great rates, resources, and having available advisors anytime for your help and your needs. And that actually concludes our presentation for today. I appreciate y'all's time, and I had such a great time being your presenter.
Thank you so much, Crystal. We have a lot of people who are just in love with the information that you've provided. Two very important topics, and I'm sure a lot of us are looking to buy a new car this summer. I am, and I can totally relate to the Amazon problem and the Starbucks problem. I have both. So thanks for covering that. It was super relatable for me. So now I would like to encourage anyone who's watching this live to ask us or the Help Center any questions they may have. Again, we will try to answer as many of them as we can in the allotted time or get back to you after the webinar is over. If you have any questions that would best be answered offline, we will message you your answer directly. So far, I have one question, and that is, does Texas Trust offer VA mortgage loans?
That is a great question. Christy, do you think you might have an answer on that?
VA mortgage loans, at this point in time, I am not sure of that. I know we offer conventional residential loans, but that probably is an offline question for us to come back to.
We will
Thank
definitely
you.
do that.
Absolutely. Yeah. At this point, I believe we do not offer them, but we can again work with you offline. We have some great programs for our conventional loans, and we may be able to help in that space. But thank you for asking that question. I don't see any other questions at the moment. Does anyone? I'm going to wait for like 20 seconds and then we can move on if we don't have any more. But I feel like you had a lot of information that you covered very well and no one is left with any questions. So that's great compliment for you.
So.
I have some people commenting that GAP has been a huge lifesaver for them. So yes, we also encourage our vehicle financiers to get GAP insurance when offered.
Absolutely. I have used it before as well.
Yep. Well, fantastic. Again, I don't see any further questions. I'm looking through to see if I've skipped anything, but I think we're good. So we're going to move on. If you would like to learn more, become a member, or talk to us directly, please feel free to contact us using the information on the screen. We have some links posted in the comments for if you would like to schedule an appointment or have one of us give you a call. The request for appointment link can get you an appointment at our Athens branch if you are a viewer from that area. And if you would like to speak to Christy, you can schedule an appointment and visit with her in that fashion. So mark your calendars. Our next Facebook Live webinar will be on Tuesday, July 13th at noon. We will be talking about the importance of insuring yourself and your assets for you and your loved ones. And it's a great segue because we ended today's webinar talking about insurance. So we'll do a deep dive next month. Thank you so much for tuning into today's webinar. And remember, Texas Trust Credit Union is here with you every step of the way for all of your financial needs. We'll see you next month.